flood market of Michigan.
This is a new FEMA program. It may give you heartburn when you hear it. It still gives me heartburn. That's why I don't have any hair. NFIP 2.0, I said it's the new FEMA program that came out probably a couple years ago now. They look at a lot of different things. Like I mentioned, flood zones have no impact on rates anymore with the National Flood Insurance Program. What they look at now are things like prior claims. They look at distance to water, the type of flooding frequency. If an area floods maybe more than 2 or 3 times in a year, just a general area, you could see significant rates at renewal because of that with the National Flood Insurance Program. They look at the cost to rebuild is a big rate driver now with FEMA. So on a commercial property, if you just put $500,000 in coverage and you put $500,000 as a replacement cost, but it's really $2 million, it might be a $2,000 difference. And FEMA's going to come back to you 3 weeks later and they're going to ask for an RCE, an appraisal or something. And if you don't have that, then they're going to go ahead and simply either adjust that premium or cancel that policy out for you. It's in the customer refund. We saw it happen when this program first came out. It was a disaster because they weren't telling people, hey, how long do I have to give you that data? This is something we created called the fingerprint of flood insurance. I found that it was the easiest way to take 2.0 and simplify it for agents of, hey, how are rates determined? These are the main factors that determine it right now with FEMA. Now, these are all rate driving factors. The problem is the National Flood Insurance Program doesn't tell you how much. They used to have a manual and you would go in the manual and say, hey, this is going to have an impact on the rate on this. Well, on here, they don't tell us it's 20%, 25%. All we can let the customer know, hey, these are the factors that are impacting your flood insurance. And I mean, it's kind of frustrating not being able to advise them, hey, maybe there is something they can control, but we can't tell them how much big of an impact. For example, mitigation before was a big thing. So I could meet with a customer and I could raise their property 10 feet. It may lower their premium $3,000. Now, they might spend $50,000 raising a property and it saves them $50 a year. Mitigation's pretty much gone out the window with this new program right now.